Two companies, both racing toward a $1 trillion price tag, both filed secret paperwork with regulators to go public, and both are betting everything on the same technology. I'm talking about OpenAI and Anthropic. And here's the thing most people are missing right now. While everyone's obsessed with ChatGPT's billion users, the smarter money might actually be watching the other guy. The one that just quietly became a cash machine for corporate America. Today, we're breaking down the Anthropic IPO, what we know, what it means, and why this could be one of the most important tech listings of the decade. Let's get into it. So first, let's set the scene. As of late July 2026, Anthropic, the company behind the Claude AI models, has filed a confidential registration statement with the SEC. That's the first real, official step toward an IPO. Reports are now pointing to a possible listing as early as September. There's even a placeholder ticker floating around, ANTH. And just this week, something interesting leaked out. According to reporting from The Information, Anthropic is considering a pretty unusual move, forcing basically every employee, not just executives, to sell their stock through what's called a 10b-5-1 trading plan. Now, normally, those preset trading schedules are a tool for CEOs, CFOs, legal teams, people with access to sensitive information who need to avoid even the appearance of insider trading. Applying that to your entire workforce would be a genuinely rare move for a company this size. Why would they do that? Simple: control. It limits when and how much stock employees can dump on the open market, which protects the stock price from a flood of post-IPO selling. Anthropic is also reportedly still hashing out lockup periods and how much early shareholders can cash out on day one. Translate that into plain English. Anthropic wants an orderly IPO, not a free-for-all. Okay, let's talk money, because the growth numbers here are honestly kind of insane. Anthropic's annualized revenue run rate hit around $47 billion by mid-2026. 6 months earlier, it was sitting at about $9 billion. That's not steady growth. That's a rocket. Compare that to OpenAI, which is reportedly running at about $25 billion in annualized revenue. So how are these two companies making their money so differently? This is the real story. OpenAI built its empire on consumers. ChatGPT has roughly 1 billion monthly active users. Massive reach. But here's the catch. Casual users don't like paying for subscriptions. Only about 40% of OpenAI's revenue comes from enterprise customers. Anthropic went the opposite direction. Around 80% of its revenue comes from businesses, companies using Claude's API to build coding tools, writing assistants, customer service bots, you name it. Enterprises pay consistently, they pay well, and they don't churn the way consumers do. And that difference is showing up in the bottom line. OpenAI reportedly lost around $38.5 billion last year and isn't expecting profitability until 2030. Anthropic, on the other hand, was originally targeting 2028 for its first profitable year. But growth has apparently been so fast that it may have already hit an operating profit in Q2 of this year. If that holds up, that's a massive deal. A profitable frontier AI lab, years ahead of schedule. Now here's where it gets spicy for investors. Anthropic's latest funding round valued the company at roughly $965 billion. On this year's revenue estimate, that works out to about 20.5 times sales. OpenAI's last raise valued it at about $852 billion, but on its lower revenue base, that's closer to 34 times sales. Let that sink in. Anthropic, the company growing faster and generating more durable revenue, is currently valued at a lower multiple than OpenAI. That's the kind of gap that doesn't usually last. If Anthropic keeps this growth pace anywhere close to the reported 130% year-over-year in Q2, expect that valuation gap to close fast, maybe even flip, the next time either company raises money or hits the public markets. But look, nothing here is a sure thing. Let's talk risk, because that's what separates a real analysis from hype. First, this is still a young, fast-moving industry. Models change every few months. Market share that looks locked in today can shift in a single product cycle. A 130% growth rate is not something you can just assume continues forever. Second, OpenAI isn't standing still either. There are reports it's moving into consumer hardware. A smart speaker potentially. That's a bold bet. Hardware is brutal. Low margins, tons of competition. But if it works, it gives OpenAI a whole new distribution channel that Anthropic doesn't have. Third, and this is the boring but important one, neither company has actually IPO'd yet. Everything here, the valuations, the revenue figures, the profitability claims, comes from reports and private funding rounds, not audited public filings. Once the S1 actually drops, we'll get real, verified numbers. Until then, treat all of this as the picture as we currently understand it, not gospel. And remember what happened with some recent high-profile IPOs? Big names, big hype, and a genuinely wild ride once shares actually started trading. IPO stocks can swing hard in both directions in their first weeks and months. Here's the bigger picture though, this isn't just about one company. If Anthropic's IPO lands well, it could be a green light for a whole wave of tech companies sitting on the sidelines. Names like AlphaSense, Discord, and Strava have reportedly been circling the public markets too, waiting to see how the big AI players perform first. A successful Anthropic listing doesn't just make Anthropic investors happy, it could reopen the entire IPO window for tech. A rough one could just as easily slam it shut again. That's why so many institutional investors were reportedly in the room with Anthropic this week. This isn't just a stock story, it's a bellwether moment for the whole tech IPO cycle. So quick recap, because I know you're watching this at 1.5 times speed. Anthropic is growing faster than OpenAI, makes most of its money from enterprises instead of casual users, may already be profitable years ahead of schedule, and is currently valued at a lower revenue multiple than its biggest rival. Does that make it the better IPO? Maybe on paper right now, but an IPO isn't a sure bet and a lot can change between a confidential filing and an actual opening bell. I'm not a financial advisor and this isn't investment advice, just a breakdown of what's being reported so you can go do your own homework with a clearer head. If this helped you understand what's actually going on with the Anthropic IPO, hit that subscribe button. We're covering this story as it develops. Drop a comment. Are you Team Anthropic or Team OpenAI for this IPO race? I'll see you in the next one.